This is Martin from Secret, the channel for learning about trading and investing. Welcome to another episode of Markets Tomorrow, the daily stock market analysis show, where we look at what happened in the market using the technical charts and then try to understand and plan for a better trade for the next day. That's April 24th, Wednesday, tomorrow, 2024. So we had an absolute flat, very range bound move today. But we had another big thing that happened. There was a huge volatility crash from 12.5 around 20%. It has come down to historic lows, almost near to the historic lows of volatility crash of 10 point something. So that was the big thing here. Absolute range bound market and a huge volatility crash. And we have tomorrow Banknifty expiry, day after Nifty, both monthly expiries. What does this indicate? Let's try to understand by studying the details. We will first go into the technical charts and then come back here. So we'll first see the plain charts. This is the candle that formed today. Does not make much sense except that it's a red candle. It closed below what it had opened, so there was no gap up, and it did close below the high of the previous candle. That fits a kind of a bull trap. So that's what it indicates, and it also indicates the selling pressure below the gap. That's at 22,500. Right. Banknifty, the candle also is bull trap, red candle, and it also shows us pressure of moving above that gap that is formed because of the sharp fall that happened last week. But regardless, Nifty and the Banknifty both of them closed positive, but flattish positive. And this is where it's placed. So it had taken a dip, that's a 5% correction, and then a good recovery for the third day, sustains, but with a red candle, a bull trap candle just below the gap. Banknifty also similar. It was in the trendline channel, taking a dip of 3-4%, and then bounced up and sustaining to close positive, but absolute flat just today. Seems like there is some pressure, selling pressure right there. Right, that's what it is, taking a pause. So we are trying to understand the levels of resistance and support. But it means more or less what we had studied yesterday. The 22,500 would be the major resistance because it has a window gap and it's also a rounding number. After that, 22,775, which is the all-time high, where the resistance would come in. And supports first would come in at the gap 22,179. That's 22,200, you can say. That zone will have some kind of support because it has got 22,300 has got a 20 exponential moving average, and 22,200 has got this gap. So 22,200, 300, that zone would be a good support zones. Just right below you have got 22,121, where you have the 50 exponential moving average also. Then you have a big rounding number 22,000. If that is also breached, then you go to the swing lows, and you could breach that 21,710. That's where the next support will come. So that's how it is. And Banknifty levels, if you study, the first resistance will be the 48,000, big rounding number, which it had cleared, but it is unable to close above that. So that's a major hurdle for tomorrow. And 48,500 after that, because it's a gap that has formed the last week. And then after that, 49,000 rounding number and 49,57. That's probably not for tomorrow. The first support can be found at 20 exponential moving average, which is coming at 47,700 nearby. But we have the 48,000 for. So we're talking about downside, right? So that's fine. 47,700 is the first support that can come in. Then 47,500 can have support. Then 47,230, 250. That's a 50 exponential moving average support that can come in. Then 100 exponential moving average is is at 46,617. But before that, you have the 47,000 big rounding number. So 47,000, 48,000 is going to be the range as per the open results. We'll be seeing that later. So that's the levels here to watch out for the next day. Today's price action, if you see, this is exactly what happened. It gapped up and then went absolute range bound, although it had a small dip. It could not sustain the moves that it made in the gap up, but neither it did fall down drastically. It tried to recover for every dip. And if you were say gap up and then absolutely range bound, although there is a dip, and every time dip got bought and then it faced resistance at the same zone. That's the price action today. So Bollinger Bands, if you put here, you can see this is skews. So whenever there is a skews, it has to explode either on the upside or explode downside. That can come in as a gap for tomorrow. Same with Banknifty also. This Bollinger Bands coming as a skews like this would mandatorily follow with a gap down or a gap up. So, or a skews breakdown. That itself is a strategy. So that's what. So Bollinger Band, otherwise if you see, you can see it's absolute contraction that's happening daily. Market is consolidation with the bullish bias because it's above the median of the Bollinger Bands. Here also, market is consolidating. There is no expansion neither on the upside, downside. Market is contracting. Market is moving sideways. This is what we can clearly make out from the Bollinger Bands. Let's get back. So today's price action, if you see, it was a range bound close, third day of recovery, positive close, but absolute flat 0.14, 31 points only gained, but still managed to close above the 20 express moving average and stood 22368 after a 5% correction in a 35% rally. And Nifty, it's absolute flat, 45 points only gained, range bound throughout the day, still maintained 20 express moving average. Both of them formed a red bull trap. Banknifty was trying to recover from 8.5 correction, doing a 27% rally. Is at just below the 48,000 big rounding number. So intraday, we are seeing it was a gap up and then range bound and then facing some resistance on the top. Levels we already see. What's in favor of the bulls and the bears? We put it in buckets. So we have 3 positive closing days, which you can say 50% nearby or a little more is recovered in 3 days for a 6 days of gap down earlier previous week. Hair high, hair low is maintained still. 20 DMA is maintained still. Bollinger Bands are contracting and not expanding. Sectoral indices are close green except for the metal in the format today. Otherwise, most of them are bullish or sideways, except only IT is only sectoral index which is in the bearish zones in the short term. Heavyweight stocks are in the green today except 2 of them, HDFC Bank and Reliance Bank. Moment in the short term, if you see, all are sideways. It's only the Nifty that is there in the bear zones. Opens from the Nifty is maintaining a 1. Nifty is very close to that, so it's kind of bullish, you can say, but not bullish enough either. The big thing that has happened is the India VIX is falling 20% in a single day from 12.5 something, it is falling to 10.19. So that's very unusual volatility. Market experts are saying that probably it could be because the next phase of the election is coming on next month only, and this next month the next whether it's going to happen. So all the tensions of the poll outcomes and all this exit polls and all that is over now, right? And Iran conflict also somewhat over, right? So de-escalation of that tension plus the middle expiry ahead of the election month, right? So all the tension is, all the fear and greed is basically carried forward to the next month probably, and this month it's suddenly crushed. So you have to be careful that people may be building up long short positions on where there is a volatility crush that happens, right? So means whenever the fall has happened, the volatility is at the very top, it's the very bottom now. There is every chance that it can spike up, right? But whenever it's always advantageous for non-directional option sellers when the volatility is at the peak, and then there could be a crush that can be expected, and then positions can be built. Now it's not the case. People make money by option buying, not selling. So that's something you have to be cautious, but it is put towards the VIX, towards the bulls bucket, because of the fact that market could be expected to move up since volatility has crashed. Normal sense. Right? But today's crash was quite unusual. You have to keep that also in mind. In favor of the bears, several factors as of now. If the momentum is still not above the RSI bull zones, the external indicator is also in the bear zones. It is not crossed over back for both indices, right? And we have a bull trap red candle, although we have a flattish close. It's not that great. Using the indices actually is close, showing some green after a big correction. So correction was in the major indices of the US market was around 6 to 8%. So big retracement has happened, not a big one. A good amount of 6 to 8% of retracement happened, but this could extend further. Right? The US market, if it extends further, it could reflect this in our case also. Or it could consolidate for some more time before it moves up. So either of that case is that, but right now it's put in the bears to the fact that the big correction has happened and there is no complete confirmation of reversal yet. Dollar is actually showing some red, that means it has cooled off, spike has stopped, but still it is put in the bucket of the bears because of the fact that we had a big spike and still it is at very close to 106. Recently we had a very big spike and rupee remains weak as before at 83 above being managed by. So weak rupee and the spiking dollar, the tension is still there. The crude oil also showing some correction of 8% cool off has happened to this and momentum has slipped to the sideways also, which is ideally should have been in the bull side but still pulled the bear side because it is still not having a 100% confirmation on that the crude spike was cooled off or not. Tensions are still there with respect to Iran, the Iran-Israel conflict and all that. So and it has not cooled off below the 81. So still there could be a possibility for the spike up. So that way it comes into the bucket of these bears. Gold is showing cool off, right? 6% cool off and fall into a sideways momentum, but still there is a possibility of a consolidation level another breakout that can happen because it's still very close to the all-time high. So that gives us the worry that the equity market could get affected because money gets shifted to a safer haven or not. So gold, crude and dollar actually ideally should have fallen with the bull side, but we'll keep it for some more days to the bear side because of the fact that it is still not confirmed to have really cooled off. Right. Some institutions continue to sell. Yesterday also they had 3,000 crores nearby selling in the cash market, and then they've been doing that since long. Probably they're waiting for some Fed cut news to come in next month, May 1st. But that's a worry. That's the reason why markets are unable to move. Domestic institutions has been supporting and they have been buying for hours. Today's data I have not seen, but they have been consistently buying. And the FI support that is not coming for a long time. So the verdict is that today was a range bound, absolute range bound and flash close day, but there is some resistance up there. Market is fearing something or requiring something before it can move further out and break out and make a new all-time high. It's waiting for that. The big thing is the volatility crash, which creates a lot of confusion among the options side traders as to why it has happened. Reasons we have already explained. Probably that could be the reasons that we discussed. But you have to be cautious of the fact that it's at the very bottom. It not with that advantage if the VIX suddenly spikes up, when it moves to the next month. So the thing is, it had a positive close. It was able to manage and sustain the bounce that happened 2 days back, and 50% of the recovery has happened. You can say from the last treatment of 5%, and still it managed to manage a 20 moving average. But the fact is that we had a red bull trap kind of candle, which is negative. Overall, the market is consolidating at sideways. It's very clear. And the higher low, higher high pattern is not broken, is also positive, despite all this drama that happened in the last 2 weeks. So investors basically has to take during the bull rally whenever such opportunities come in, you have to invest in long volatility in SIP mode, right? And for the traders, you just need a direction. The direction does not come in either side, upside or downside, sideways. It's consolidating exactly. So the only option then for us to do is either do the non-directional spreads or non-directional option selling on either side, or non-directional directional spreads. Also you can try. So that's all that's in our hands. Although it's not that great with for option sellers as per the Spread difference between blind volatility and the actual volatility. The spread difference is not that great as of now. You have to check whether that changes from tomorrow or next expiring onwards or not. So whatever be the case, all that's in our hands is to manage the risk and position size, have portfolio level hedges, and then portfolio level stop losses and all that. That's the only thing that is not control. Rest is to study the support and resistance levels and place your bets accordingly, right? As per risk appetite and then as per the capital that's available. Now for tomorrow, it's a bank expiry. The levels of 47,000 to 48,000 as per the apparent list. Portfolio is almost near to the bullishness, but we had a bearish build-up, short build-up today. So that may be the range that is expected. So the market is trying to consolidate, then it may stay at the 48,000, close of that level. The market is going bearish, then probably it can go as low as 47,000. So that may be the range for tomorrow. It's sideways market, that's the view. Yeah, the quite unusual thing was the volatility crash. I have to check whether that indicates something. We have to be slightly cautious on that factor because this never happened with such intensity. So that's the only thing that we'll be careful about. Normally we have to be careful if the big spikes at about the 20 and all that. So this has gone to 10 level, the lowest dips that we ever had when it was least expected all in one day. So that's why we have to stay a little cautious as to new positions that it's being taken on. That's all I have. Manage your risk, play it safe, and happy trading, happy learning. Bye bye.